best trade setups that I'm looking at over the next couple weeks. So starting with crypto, everyone's been talking about Bitcoin breaking 100,000. You can see here that it recently pushed above that long-term trend line after breaking out of this broadening wedge. Once it broke over 73K, it had this really strong push to the upside. And then as long as it can hold this upper trend line, that is bullish for Bitcoin. And I do think that it can continue to push higher. If it breaks below here, we're probably going to have a much quicker and faster sell-off all the way back to that 74K level. What I'm actually more interested in, though, is Ethereum. If you are looking to get into crypto today, this is a much better position because it hasn't broken all-time highs yet. You can see here that it did break above this upper trend line, or right around this 3,800 level. And as long as it can hold here, so you can stop loss if it breaks below, but as long as it holds above this level, it has a really strong chance to push to all-time highs. If you look at this longer term pattern that has played out, this is what is called a cup and handle, and it has a much higher price target. Usually I'm not a big fan of this. It's kind of like pareidolia, seeing shapes in clouds kind of thing, but I do think that if it does break above all-time highs, you'd have to consider that Bitcoin is still holding around 100K as well for this to actually happen, but it could push all the way up to this 6,000 level. I don't know if that's going to happen. The market's like really hot right now. I don't know if it can sustain that. It might take longer, so we'll see how this plays out, but Ethereum's in a much better risk-reward position than Bitcoin today. Taking a look at Tesla, this was one that I actually played this morning. So it did break out of this rising triangle. It has more of like a flat top and a steep uptrend. And then you can see here it broke out. It went to 315, which was like a previous resistance zone. You can see a lot of candles rejecting from this level before. And it formed a very similar pattern to the one below it. And eventually it did break to the upside. I actually caught that this morning. So I did see that because crypto ran overnight, I knew that was risk on. And so there was a really good setup here, and I bought call options right at open on Tesla. And then it pushed up to 375, and I cut out for a nice gain. So that was a really nice setup. I do think that Tesla has a really strong chance at continuing to hold, as long as it holds 360, that I do think that it will start to test these previous levels, and I do think it will get to all-time highs. All the other Magnificent Seven stocks have gotten there, like Meta, Netflix, Apple. So I do think that Tesla has a really solid chance, especially with Elon being best friends with Donald Trump, who's going to take office in January, that we could see Tesla push all the way back up to 414 all-time highs and potentially even break it to the upside. It just really depends on where the overall broader market is. If the market slows down and kind of goes sideways, I think some of the other big stocks will kind of falter a little bit. It may be Nvidia, AMD, but then Tesla will have the ability to continue to push higher. So I think just like with all the big funds, they have to buy all these shares. And so in order for Tesla to go up, usually another stock has to go down. That's just how it works. There's a rotation between these larger stocks. Taking a look at Grab, so this is one that I'm playing in the Robinhood Challenge portfolio. This is one that I'm really bullish on, not just because I think it's a good company, has a lot of growth opportunities. It's kind of like Shopify, Instacart, and Uber all rolled into one. So they do like payments. You can order like an Uber. You can send packages. You can order food and groceries. So it's kind of like an all-in-one app, and it's in Malaysia and Singapore. But nonetheless, from like a technical perspective, it's just in a great setup. It's finally pushed above this long-term trend. So you can see here it's been just making higher lows over a period of time, and it's been building and eventually broke out above this resistance level in this channel that it was trading in sideways for a few years. And now that it's pushed up, it's trying to get through this volume that it formed all the way back in 2021, early 2022. But you can see here that price moves quickly, right? So once it broke down $10, maybe I should just draw a horizontal line here. It's probably much easier to see than me using my pen, but you can see here that it broke below $10 and price moved very quickly all the way down to $3. So it's had a really bad sell-off. But what does that mean? That means there's not a lot of volume between $4 and $10. And so if you just look at the volume profile, you can see here there's a ton of volume down here. So that's going to act as support, right? Because there's been so much business that's done there. But now we're pushing into higher levels to see what the fair value is of Grab. And you can see that, yes, there's some volume through here. Just from the past, there's some volume here to get through. I think it'll push to around $6. So that's pretty safe. But once it breaks over that $6 range, there's like almost no volume here. In fact, in this section, there's a zero volume node. And so price is going to want to move quickly through here to try to test that level. And once it tests that level, it's going to reject off it. So the way that I'm going to play this is really twofold. I'm going to buy shares, I'm going to sell puts, and I'm going to buy leaps. I'm going to buy call options, $5, $6, $7, $8, $9, and hope that this pushes up to that level quicker rather than later. And then I can either do one of two things once it gets up to $10. I can either sell calls if I want to stay in the position. I can just take profit and exit. Or I could even buy puts because it's going to reject from that level and come back down and try to fill in some gaps where it skipped over all this volume. So that's really a key thing with trading, is just finding the good setups, being patient, and then scaling into a position, accumulating, and then hoping that your strategy and your play actually goes through. Next, just looking at NIO. So NIO, this is an EV manufacturer in China. Obviously, China has had like some struggles in their economy, so NIO has gone to the downside. Same thing with Alibaba and some other stocks. But NIO has a really good product. They also do battery swaps. So it's like batteries as a service, as opposed to like the traditional, you have to sit there and let your car charge. So they actually just swap out your battery in 3 to 5 minutes. So that's kind of interesting, and they have a really big network throughout China. They also just recently released an ONVO line, which is like more of like a low cost tier as opposed to their luxury SUVs and sedans. And so NIO is trying to compete in some other markets, and there's probably going to be some growth that comes from that. And I'm really hoping that China also stimulates the economy like they just recently did on this run. As you can see here, it went from $3.50 all the way up to $7.73. So it's kind of in this weird position right now. It's starting to base. You can see that on the volume profile just over the last couple months. There's still a lot of volume in here. And so my hope is that it can hold this like $4 range and then push up to this upside. There's a bit of a gap here and like a low volume that I think that I'll want to come up to and test. So I'm really bullish on NIO as well. This isn't a stock that I want to hold forever, but it's more of, it's in a decent position where I can just start buying in and scaling in. And I know that over time, it's probably going to come back up to like this $6 to $8 range. So that's really what I'm looking at. And then if it can get over those levels, that would be great. I'm just going to monitor this one, keep up to date with its financials, its revenue growth, and just kind of get an idea from there. Next, PayPal. This is like a no-brainer. You can just see that it's based for such a long period of time. If you look at other financials, those have gone up over time, like SoFi, Square, which is now Block. So there's like a bunch of fintech companies that have based over time, and then now they're having this stronger push to the upside. And similar to Grab, there is not a lot of volume above this 112 range. So I think the stocks need to at least get to 100. It might reject around that 100 level. You could buy shares, you could buy call options, you can just scale in over time. But I think that this 100 to 112 range is like a good price target to have. And then if it does push above those levels, there's not a lot of volume here. So it could really skip all the way up to 180, 190 in the long run. I don't think it's going to get there next year just because there's a lot of uncertainty with unemployment rates. There's just still a lot of data that's coming out that's kind of worrying me about a potential recession with housing data. personal savings rates, things like that. Penn, this is also a good setup. Looks pretty similar on the chart. You can see that these beaten down quality stocks have started to find a base and start to form higher lows and higher highs and start to push into this uptrend. On a more granular level, you can see that it has this upper trend line. Oh, I don't know what happened there. Hold on. So we go back. You can see that it has this upper trend line and a lower trend line. So this is kind of like similar with Tesla. This one is a bit less biased to the upside. So it's possible that it could break down below this, but you could always just play this lower trend line and buy on this side and just hope that it breaks to the upside, or you could even just take profit when it hits the upper trend line if you're really just trying to swing on like a few weeks. So that's something to look for. This like 2242 level, you can see that there was a gap here from before, and that's been like an area of where it's come up and filled it. So that's what it's doing right now. It's filling in this gap that it formed. But if it breaks over that level, that will be a breakout, and we'll have a much stronger push to around $26 a share. So that's my medium-term price target for Penn National. Then AMD and SOX, I'm pretty bearish on AI and semiconductors right now. I think they've like had their run similar to how EVs had their run in 2021. AMD has been in this downtrend, but it is starting to form. Well, you can see here it like broke down, right? And then it came up and retested. You know, if it's able to hold this level, that'd be great, but I do think it's going to fall lower. And the reason why I think it's going to fall lower is because SOX, this is like a semiconductor ETF. It's pretty obvious this isn't a head and shoulders. And so I do think that this is going to have a stronger push to the downside. This would be like around where the neckline is. But there's also some gaps. So you can see here, there's a gap around 190, and it's going to at some point come down here and fill that zone. So I'm just being patient. A lot of trading is just about being patient, waiting for the right opportunity, waiting for price to make its move, and then scaling in when maybe it's a little bit scary because like you're kind of catching a falling knife, but you just set a stop loss, right? You get in at the best possible price that there is. You set a stop loss and you just assume that this is going to push to the upside. Then you're in a really good position than trying to like chase the bounce here, which a lot of people might be because they're like, oh, it bounced here. It's starting to go back up. I'm bullish on AMD. I'm bullish on SOX, NVIDIA. Like, you just got to have patience. Like a similar setup to this, I saw a lot of people on Twitter was they're chasing Intel, right? So like Intel has had a bunch of terrible news. They just fired the CEO. They've had tons of layoffs. You can see all these gaps that have formed here because it's just been selling off. Now, it's gonna fall more because you can see that it's forming a bear flag, and this is like picture perfect. And I talked about this on my other video. And then, even though just like the other day they fired the CEO, the stock went up 3%. People were celebrating and trying to chase the stock. They didn't see this bear flag, and then eventually it broke down, which is a bear setup. This is going to at least come down to this $18, $19 level. But the real target of it is the high to low point of the bear flag. This isn't always accurate, but if you retrace that, the price is closer to like 1550, which has been a support zone, maybe even like 1684, where it's reacted before in the past. So yeah, Intel's probably going to fall more. Now, do I think that Intel is a good stock and I want to own it long term? Sure. They had a bunch of bad news. It's probably one of those things where at some point it's going to come back up and fill this gap that it formed after earnings. So yeah, you should buy Intel, but you should be patient and wait for the right price at the right time and then take full advantage of it. There's always going to be opportunities in the stock market to make a lot of money. It's up to you to control your emotions, have the right plan, and execute on it, and you're going to be off to the races. So I hope you enjoyed this video. I knew I threw a lot at you. I was even losing my voice throughout it. So Make sure you guys subscribe, like, join me in the Discord, ask me any questions, give me some stocks to look at as well. I'm always trying to find the next play, and I'll see you in the next one. Peace.